Friends, welcome back. After the concept of materiality, we are going to learn one more new concept. That is the concept of audit engagement. We'll be learning who is an auditor and how these audit engagements are to be dealt with. There is a concept of audit engagement letter. What kind of letters are issued in an audit engagement? We are going to learn all these things. I'm going to share the screen with you. Just wait a minute for this. Are you seeing the screen now? Are you seeing the screen? Auditor and audit engagement.
Yes.
Yeah. So friends, earlier we have already seen various kinds of audits, statutory audit, internal audit also. This concept or many other kinds of audit like concurrent audit, revenue audit, internal, these things we are discussing in our earlier classes. So we already know who is an auditor. As you know, the person who conducts the audit, we can refer to that person as the auditor. What he does, he makes a report. That report is called as the audit report. You have already seen independent auditor's report. Auditor acts as an independent agency. Therefore, many places you can see report is titled as independent auditor's report or report of an independent auditor, like this. The reports are titled. What he does, what that person or the auditor does, after due examination of financial statement and related records, he gives an opinion. And that opinion is about true and fairness of the financial statement. Okay. And as you know, as per the requirement of Companies Act 2013, there is a qualification which is required to become the auditor. And Companies Act 2013 suggests that it is only the chartered accountants who are professionally qualified to conduct the audit of companies. So if companies' financial statements needs to be audited, then only chartered accountants can audit. And chartered accountants individually, they can do the audit, or a firm audit can also be conducted by a firm of chartered accountants. Okay, a firm of chartered accountants or a firm where majority partners are chartered accountants, audit can also be conducted in the name of the firm. Okay, it's not necessary that all the partners should be the chartered accountant. But if majority of the partners are chartered accountants, audit can be conducted in the name of the firm. But in that case, the audit report needs to be signed by the partner who is a chartered accountant. Okay, reports can be signed only by a chartered accountant. This is the first concept. Okay, now you see the exact provisions of Companies Act 2013. Right? Can some of you read it? 141, subsection 1.
A person shall be eligible for appointment as an auditor of a company only if he is a chartered accountant, provided that a firm whereof majority of partners practicing in India are qualified for appointment as aforesaid may be appointed by its firm's name to be auditor of a company.
Okay, now you see that means what? Who majority of the partners practicing in India are qualified for appointment as aforesaid. As aforesaid means they are chartered accountants. Okay, first point you see it is said that who are qualified? Only chartered accountants. If the majority of the partners are also chartered accountants, then appointment is possible in the firm. Right, and it is also possible the appointment in the name of limited liability partnership. That is also a kind of partnership. Right. And here if you see the partners who are chartered accountants shall be authorized to act and sign on behalf of the firm. Audit can be taken in the name of the firm. Even when all the partners are not chartered accountant or where majority of the partners are chartered accountant, audit can be taken in the firm's name. But it has to ensure that audit is executed and the report is signed by the chartered accountants only. Did you get the point? Now, coming to the broad classification or functional classification of the auditor, we can classify into two categories. First one we'll see external, the other one is the internal auditors. right? External, we have discussed in our earlier classes. The vis-a-vis to the organization, they are external. They are not the employees of the organization, that not the employees of the company. They practice the profession of accountancy. They are qualified. They have passed the professional examination, which is the minimum eligibility to become the auditor. And they're appointed, as you know, by the shareholders or the owners of the organization. When they're appointed under a particular law or under a particular statute, they are referred to as statutory auditors. And in case of a statutory audit, the scope is largely defined by the statute. The statute defines what the auditor are supposed to do. Scope is defined by statute. Okay. And auditor has to
Excuse me, sir.
follow. Yes, please.
Sir, actually, Ratika now texted me to inform you that he'll call you later and he's unable to unmute. So he told to
Okay.
inform,
Right.
sir.
Right. Right. Okay. Right. So we'll
Thank
proceed
you.
this thing. So when we talk about the external auditors, they're, as you know, independent agencies. They're independent of the management of the organization. And you know, management is responsible to prepare the financial statement in such a way that it is free from material misstatement. An auditor gives an independent opinion. They are not related to each other. Auditor and management, they are not related. Therefore, auditors are called as the external auditors. Okay. The other category of auditor is referred to as internal auditor. That is, in fact, a different kind of engagement. And for your information, you should know the internal auditors and statutory auditor cannot be the same person. Some organizations, there is a statutory requirement to conduct internal audit, and many organizations also voluntarily conduct internal audit. Just like we have seen, there are standards on auditing, which are basically meant for statutory audit. There are also a series of standards for internal audit. Right, day by day, the internal audit engagements are also gaining importance. Many organizations are volunteering to go for internal audit because internal audit evaluates in detail the procedures and the financial and other controls, managerial controls, which are embodied in the system. Whereas external auditor only gives an opinion on the financial statement. So internal auditor, you can say it is more detailed, right? And these people are internal vis-a-vis the organization. They may be professionally qualified. They might have different kind of qualification also, not necessarily always chartered accountant. They're appointed to perform a specific work, meaning the scope needs to be decided by the management. They're appointed by the management, scope is specified by the management. Many cases one can find they're in fact, they may be employees of the organization. Some companies, they have some organization, they have their own internal audit department. Okay, some private sector, public sector, some banks you can find they have their own internal audit department. And many organizations also you can find this job of internal audit is assigned to or it is given to someone on contract basis, to a different firm or to a different person on contract basis. But since they are appointed by management and management decides the scope, they are not independent of management. Okay, but independence is one of the essential characteristics of the audit function. Therefore, even in internal audit, to the extent possible, independence should be given to the internal auditor. Therefore, how it happens? So normally, internal auditors are expected to report to the highest authorities, maybe managing director, maybe to the board, or maybe to the audit committee, so that they can, to some extent, they can maintain their independence and they can write the loopholes of the organization. And in case of internal audit, the scope may extend beyond financial accounting. They may cover other aspects also. They may cover various managerial decisions also. Proprietary aspects also can be covered. They may be investigative also. They may investigate into certain specific things. They may conduct inquiry. Okay. So to the extent possible, they should be made independent. Then only internal audit engagements will be successful. Now, who will decide the scope of internal audit? If you refer to Section 138 of Companies Act and related rules, you see the audit committee or board shall, in consultation with the internal auditor, formulate the scope, functioning, and periodicity and methodology of conducting internal audit. So statutory audit is a different thing. Scope is defined by law. In internal audit, what happens? The management, which may include audit committee or board, they need to consult the internal auditor and jointly they are supposed to decide the scope, functioning, and periodicity. Okay. Got some idea about internal audit?
Yes, sir.
Objectives of internal audit is different from objectives of statutory audit. Now, objectives we have already covered earlier. Now, once you've understood that these are the audits, so we are going to learn something about one more concept, that is engagement terms. In audit engagement, what happens? Clients expect something, or the organization might be expecting something. Auditor maybe, or the scope of the audit. In some cases, it is defined by the statute. Some cases, it is defined by the management. In case of internal audit, it is defined by management. So there should be what is expected, that in any kind of audit engagement, there should be clarity that what the auditor is supposed to deliver and what the management is supposed to deliver. The audit engagement letter or a document which contains these terms of engagement is therefore important. Okay, through that document, it will be clear that what is the nature of this engagement. Okay, are you getting? So audit engagement terms needs to be recorded somewhere. It needs to be written. Because both the parties, auditor and management, they should be clear about the nature of the engagement. So ideally, they should keep it in writing. What actually happens, or how it actually happens? Auditor writes the entire content of engagement in a letter which is called as engagement letter. And auditor sends this letter to the client. Who sends the letter? Engagement letter is not that client gives to the auditor. Who gives the letter to whom? Engagement letter is given by whom to whom? Can you tell me?
So the auditor to the client.
Auditor to the client. Engagement letter is not from client to auditor. It is from auditor to the client. Right? Explaining the entire terms of the engagement. So normally it is given in 2 copies and client's acceptance is registered in 1 copy. Client signs the in 1 copy and returns to the auditor as an evidence that he is agreeing to the terms and conditions. Okay, so this is helpful. Helpful in the sense it will help in case there is any possibility or to avoid misunderstanding between these 2 parties. It is extremely important. Okay, now I'll show you a format of audit engagement letter. You can have some idea that about the content of this. Yeah, I'm just showing a format. Are you seeing it? Format of audit engagement letter. Is it visible to you?
Yes, sir.
You see, it is written to the board of directors. Okay, so introductory paragraph referring to the audit, referring to the assignment, how these assignments are there. Okay, how audit will be conducted. Okay, our audit will be conducted with the objectives of our expressing an opinion on the aforesaid financial statement. Here financial statements are referred to, and it says our objective of the audit is to express an opinion on that financial statement. And also it is highlighted that it is described that we will be conducting the audit in accordance with standards on auditing issued by Institute of Chartered Accountants of India. So standards needs to be followed. That is also clearly mentioned in the audit engagement letter. Many other things. Audit also include evaluating the appropriateness of accounting policies. And also it shows there are some inherent limitations of the audit, including the possibility of collusion or improper management, or in collusion or improper management override the controls. All these things we have discussed. And there is always an unavoidable risk that some material misstatements may remain undetected. These things are also mentioned. So audit should not be taken as a guarantee that the financial statements are free from our material errors and frauds. Okay, certain compliances requirements are there. These things needs to be complied that are highlighted in the audit engagement letter. Okay, client has to provide all information, books of accounts, vouchers, that has been mentioned. Any additional information called, client has to provide unrestricted access to the persons of the company where auditor feels there is some evidence. The report will be addressed to the shareholders. That fact also has been mentioned. And here also it is mentioned, if some fraud is found, directly we will be reporting to the central government. Okay, so like this, you see it is content. Now you see last paragraph. Please sign and return the attached copy of this letter to indicate your acknowledgement of the agreement with the arrangement for my own auditor financial statements, including our respective responsibilities. So client signs, auditor gives it to the client signs it and returns it to the auditor. Okay, one copy is returned to the auditor, and that works as an evidence that this is the understanding, this is the client's responsibility, this is the auditor's responsibility. Client has to give access. So all these things are clearly described in that letter, and that letter is called as what? What is that letter? Can you tell me? Who can tell me? That is called as audit engagement letter. Okay, and this auditing standard, that is SA 210, deals with audit engagement letter. The title of that standard is agreeing the terms of audit engagement. Auditors shall agree to the terms of engagement, and the detailed terms needs to be recorded in audit engagement letter. And it shall include the objective and scope of auditor financial statement, responsibility of the auditor, responsibility of the management. Okay, objective, scope, auditor's responsibility, management's responsibility. Indication of applicable financial reporting framework. It should contain that. Then a reference to the expected form and content of the report. What kind of reports will be given, to whom it will be addressed. All these things should be the content in the audit engagement letter. Did you understand?
Yes, sir.
And one more thing you have to keep in mind, if any law or regulation has sufficiently prescribed the details of engagement, then auditor need not record them in detail. Okay, because law itself defines the scope. So auditor, there is no other way. Auditor has to comply with this law. So if the regulation or any law prescribes in sufficient details the terms of audit engagement, the auditor need not record them in a written agreement. Otherwise, in normal circumstances, audit engagement letter should explain in detail the responsibility of the auditor, responsibility of the management, and other related things. Did you understand up to this?
Yes, sir.
Now, one question might be coming to your mind that, okay, in case of a new audit, then definitely audit engagement letter is important because auditor need to explain to the client that this is your responsibility and this is my responsibility and this is my objective, this is my scope. I'll be doing like this, and you should not expect all something more than this. That is a need to communicate. But whether that kind of communication is also required in case of recurring audit. Recurring audit means that as auditor is appointed for a year, next year it is auditor's appointment is renewed. Next year again it may be renewed. So when this kind of renewal happens, so normally people assume that management already understands that what is their responsibilities. So now question comes, is it necessary that every time I should send an audit engagement letter or not? What do you feel? Every time there is a need to send? Audit engagement letter, even in case of recurring audits. What do you think? It should be sent or not?
Yes, sir, it should be sent.
Let us see. It's not exactly necessary that each and every time you need to send an audit engagement letter. What happened? Auditors should assess the circumstances. On the basis of his assessment, he will decide whether engagement letter needs to be sent every time or not. If he feels there is a need to remind the management or management has forgotten that what is his own responsibility, then auditor may decide to send the engagement letter in case of a recurring audit. Sometimes engagement needs to be revised, or the terms of engagement needs to be revised. There might be changes in law, changes might be circumstances, and because of which there is a requirement to revise the terms of engagement. In that case also there is a need to resend the audit engagement letter. Okay, but if auditor knows that management is fully aware, things are fine, there is no change in the circumstances, the auditor may decide not to send the engagement letter in case of a recurring audit. Okay, now how auditor will decide whether he should send it or not? There are some items which are listed here, and in these situations, it is suggested to send the audit engagement letter in case of recurring audit. First case, you see any indication that entity misunderstand the objective and scope of audit. If there is some indication that management has misunderstood the objective of audit and misunderstood the scope of audit, then we need to send it once again in case of recurring audit. If there is any revision or special terms in the audit engagement, either from management side or from auditor side, they feel we need to revise the terms, then engagement letter needs to be sent. If there is a recent change in senior management, the people who are managing the company, senior management has been changed, board of director has been changed, now new board. Previously, we had written the letter to an earlier board. So in that situation also, there is a need to send the engagement letter in recurring audits. If there is significant change in ownership, if ownership changes, shareholders change, then there is a requirement. If there is significant change in nature and size of entity's business, earlier it is working on a small size, now turnover has increased 4 times. Right, nature of business also has been changed. The kind of business was doing that business organization was doing, now activities are also changed. So there is a need to revise the engagement or resend the audit engagement letter. If there is any change in legal or regulatory requirements, if some new law has come or law has changed, consequent to his responsibility scope are changing, so there is a need to send the engagement letter in case of recurring audit. If there is any change in the financial reporting framework, then also there is a requirement, or there is any change in other reporting requirements. Suppose earlier something is not applicable, CARO is not applicable. Now CARO is applicable. That is Companies Auditors Report Order. So some new things has become applicable. Or tax audit earlier was not there, audit under income tax law, but now this year it is applicable to the client. So if there is a change in reporting requirement, then there might be auditor might think there is a need to send the engagement letter, even if it is a recurring one. Did you understand the situation?
Yes, sir.
Okay, so only when these indications are there, there is a necessity. Otherwise, auditor may decide not to send it. Okay. Now, few more points we need to learn regarding auditor's engagement. Now you see, auditors shall not agree to the change in the terms of audit engagement. Once it has been decided, responsibilities are fixed, then in normal circumstances, auditors should not agree to any change in terms of engagement where there is no reasonable justification. If there is some logic behind that, if there is reasonable justification, then these terms of engagement may be changed. Otherwise, what will happen? Ideally, there should not be change in the terms of audit engagement. Okay, that one more point. Then we have to also remember that prior to completing the audit engagement, if the auditor is requested to change the audit engagement to an engagement that conveys lower level assurance, the auditor shall determine whether there is a reasonable justification for doing it or not. Are you understanding this paragraph? Let us say auditor has started the audit. Engagement letter was already given prior to that. Auditor has started the audit. But before completion of the audit, the management says, no. We'll change this engagement. We'll not make it as an audit engagement. We'll, let us say, change it to a review engagement. And there is a difference between the audit engagement and review engagement. Audit engagement or audit report gives a high level of assurance, whereas a review or limited review, we call it, limited review report gives a low level of assurance. Are you getting? Because limited review means auditors says clearly, auditor reports that I have not audited. Only limited items are reviewed by me. Okay, so the level of assurance given by audit is high and the level of assurance provided in a review engagement is low. Are you getting this point?
Yes, sir.
And let us say auditing is about to complete, but before that, management is insisting now we'll change it. Might be auditor has asked something, auditor is going to, management is smelling that auditor is going to report something adverse. So immediately management say we'll change it, we'll make it a review engagement. In that case, what auditor should do? Then what he should do? Auditor first of all try to assess that whether there is any justification for doing this. Is there a reasonable justification? After that, you will see that if the terms of audit engagement are changed, the auditor management shall agree and record the new terms of engagement in an engagement letter or other suitable form of written agreement. So if it is felt that there is reasonable justification, they may decide to change the agreement and new terms may be recorded, may be written. But you have to remember, if the auditor is unable to agree to the change of the terms, auditor feels that these new terms are not agreeable. Auditor wants to continue the old terms. New changes are not agreeable to the auditors. And he is not permitted by the management to continue with the original audit engagement. Original was signed. Now management is trying to change it. and the changes are not acceptable to the auditor. Now, question comes: what the auditor should do? Auditor can do two things. First of all, auditor shall withdraw from the audit engagement where possible under the applicable laws and regulations. That means auditor needs to quit if it is legally permitted. But that's not over. In addition to that, he has to determine whether there is any legal obligation, whether there is any obligation, contractual or otherwise, to report the circumstances to other parties, such as those charged with governance, owners, regulators. Now you see, once the management is trying to change the engagement terms, if it is not agreeable to the auditor may decide to withdraw from that engagement. And in addition to that, he has to think, is there any requirement to inform other parties? Sometimes if auditor fraud kind of situation, auditor may report to the central government. Sometimes auditor might have to report to the regulators or report to the board or people who are those charged with governance. So auditor has to consider whether there is any obligation to do so. Are you getting?
Yes.
Did you understand the concept of audit engagement?
Yes.